Something big just happened, and it's flying under the radar for most people. Hines, the executive director of the White House Crypto Council under President Trump, has resigned. This is the same Hines who has been on stage at countless conferences and live streams talking about crypto policy, saying publicly that the United States wants to accumulate as much Bitcoin as possible. When asked how much they already had, his answer was always the same: "We don't know, but we want all of it." Coming from someone in his position, that was a powerful statement. This is a man with access to insider strategies, top-level partners, and sensitive information about where the digital asset market is headed. And now, without warning, he's stepping down. Patrick Witt will be taking over his role. Hines leaves after less than a year in the position, but in that short time, he and the administration have done a lot to push the crypto industry forward. For many, this raises questions. Why leave now when things are going well? On the very same day, Ethereum crossed $4,300. XRP topped Grayscale's weekly crypto performance chart with a 9.7% return in the first week of August, and the broader market is heating up. Stellar, Cardano, Dogecoin, and Ethereum also posted strong returns, but XRP was the standout performer for that week. This momentum is building, and big moves are clearly underway. Hines previously worked at a growth equity firm before joining the Trump administration, and it's been reported that he will stay on as a special government employee to assist with AI initiatives alongside David Sachs. That alone is interesting, but it's the shift from public office to private sector freedom that is telling. When you work for the White House, there are restrictions. You can't simply take part in certain deals or launch certain ventures without potential conflicts of interest. By stepping away, Hines now has the freedom to pursue private projects, partnerships, and investments without those constraints. It's entirely possible he sees opportunities so big that the potential gains outweigh the prestige of his White House role. Some might speculate that he knows exactly what's coming next. The timing suggests that major developments are on the horizon. The administration's push for Bitcoin accumulation, their increasing focus on stablecoin policy, and the ongoing discussions about spot ETFs could be paving the way for explosive growth in the market. Ethereum at $4,300 today feels a lot like Bitcoin at $20,000 in the past, just a point before a rapid climb to a new all-time high. If Ethereum pushes past $4,000 with strength, a quick run toward $5,000 is in play. Meanwhile, XRP remains a top contender for the coming months, with increasing institutional interest and market positioning that could surprise many traders. The fact that XRP is leading returns in Grayscale's report is no small detail. The asset has had a strong recovery, and for those who have been watching closely, dips to $3.30 or $3.20 are seen as buying opportunities. The market's attention might be on Ethereum right now, but that doesn't mean XRP is being overlooked by institutions. Often, the biggest gains come from assets building quietly in the background while attention is elsewhere. But Hines was not just a figurehead. He was actively engaging with leaders worldwide, attending conferences, and discussing digital asset strategy with policymakers and industry giants. His travels took him to Bitcoin conferences, the Middle East, Hong Kong, Europe, and beyond. He spoke with the top crypto exchange CEOs and explained the administration's digital asset agenda directly to global decision-makers. He understood both the political and economic sides of this space, and that combination is rare. Back in June, less than 3 months ago, Hines was on record talking about Bitcoin as digital gold and emphasizing the U.S. should accumulate as much as possible in a budget-neutral way without costing taxpayers. The president had been clear about that in the executive order. He mentioned creative approaches and hinted at strategies already in motion. Now, so soon after those statements, he's walking away from the role. If you connect the dots, it's not hard to imagine why. Someone with that knowledge and network can become a billionaire in the private sector much faster than working under government limitations. His replacement, Patrick Witt, will have big shoes to fill. We'll see how effective he is in continuing the momentum. But for now, the focus shifts to what Hines does next. Whether he starts a new exchange, launches an investment firm, or partners with existing players, whatever he does will be worth watching closely. The same goes for the crypto market itself. With Bitcoin accumulation as a stated US strategy, Ethereum testing higher levels, XRP holding strong, and new ETFs and financial products on the horizon, the conditions are set for a potentially historic rally. The resignation of Bo Hines might seem like just another political change, but in the world of digital assets, timing is everything. When key insiders make moves, it's often ahead of major market shifts. So we'll keep tracking this story, following the money, and watching the charts. If you want to stay ahead of these developments, make sure to subscribe, turn on notifications, and join the conversation in the comments. The next few months could redefine the landscape for Bitcoin, XRP, Ethereum, and the entire crypto industry.